Hey guys, thanks for joining in. Hey guys, thanks for joining in. We'll be starting in just about 1 minute and looking forward to this session. And hopefully, you guys will learn something cool today. Harish, let me know when we can start.
Yeah, let's start in 2-3 minutes. As soon as we hit 200, we'll start.
Sounds good. For all of you guys who are just joining in, we'll be starting another minute or two. Okay, I think we hit about 200 people, so we'll probably get started. I just want to give a disclaimer that this won't be a long session, right? I know that sometimes 1.5 hour, 2 hour sessions become very boring and we have other things to do, right? So I'll try making this very short, maybe like 30, 40 minutes or less than that. And then we'll have a cool, quick Q&A session where I'll be taking your questions and answering them, right? So let's begin. Uh, so first of all, welcome to the Entrepreneurship Club. Here we're going to have classes every weekend, and then we'll have competitions and events and a bunch of other cool things during the weekdays. So just a brief overview about the Entrepreneurship Club. Like I mentioned, weekly learning sessions plus brainstorming sessions on Zoom. And don't worry if this is your first session, because each learning session or each masterclass will be completely independent of other sessions. So even if you've missed last weekend session, it's fine. Don't worry. This will be completely independent, right? Apart from that, we will have 2 to 3 events, competitions, mentorship sessions every month with actual VCs, actual investors, and we will give you guys the opportunity to pitch your idea and try to get funding, right? And of course, we'll have some guest lectures and some exclusive events as well. So moving forward, today's session is going to be how to pitch to a VC. What is the process? What is the journey? What are some common myths? And of course, how to build a good pitch deck. Now, these are the two main things. And also at the end, we will be having an announcement about some pitching competition that's going to come up. So stay tuned for that. If you guys are interested in pitching and want to participate in a competition, stay tuned till the end. Like I mentioned, it will be too long, just a 30-minute session, probably shorter than that. So first of all, for all of you guys who don't know what a VC is, VCs are venture capitalists. They are investors who invest money into startups in exchange for a small percentage or a piece of the company called equity. Now, it is their job to invest in startups. They keep on analyzing different startups, and the best ones that they think are best, they invest in those. So that one day when the startup becomes big, their piece of the company becomes very valuable, right? Now, there are multiple different types of investors. We have micro and small VCs, large VCs, family offices, and angel investors, just to name a few categories. There are some others as well. Micro VCs and small VCs are usually venture capitalists who invest less than 1 crore or about 1 crore. Large VCs are anywhere who can invest anything from like 5 crores to 5 million to 50 million to $100 million, right? They're large VC firms. Family offices are usually rich businessmen in India or out of India who have some extra money and they want to invest into startups. So, for example, Tata family might have a family office where they invest in startups using their personal money. And angel investors are anyone who uses their own money to invest in a startup. So what is the difference between a VC and an angel investor? VCs do not actually invest their own money. They get money from somewhere else, they manage that money, and they decide which startup to invest in and which to not. So it's not their money they're investing, it's someone else's money that they're managing. But angel investors, they invest their own money into startups. So this is just some differentiation between them. Now I see that a lot of you guys are asking questions on the chat. So I will be going to questions at the middle and the end of the session. So don't worry at all. Most of your questions will be answered. Now moving forward to some of the common myths. Now, these are some questions that I get asked on a daily basis on LinkedIn, Instagram. A lot of people ask me, what happens if the company fails? Do you have to pay back the investors? And the answer to that is absolutely not. When any VC or investor invests into your startup, they know that it is a risk. They know that the startup can fail. In fact, there's a high chance of startup failing. Maybe about 1 or 2% of startups actually become huge, like Byju's or Unacademy. Hundreds of thousands of startups die at a very early stage due to a lot of different reasons, which we won't be going in today. But in short, you do not need to pay back your investors unless and until you did some fraud with the money that the investors gave you. If you use the money for building your startup, for building your product, and it did not work out as it was supposed to, no issues. The investor understands and you do not need to pay them back. Second myth is reaching out to VC hard. Now, a lot of people think that reaching out to VCs is very hard and only the top people can do it, but that's not true. VCs actively look for people to hear, to listen to their pitches, to understand their startups and other things like that. So it's definitely not hard to reach VCs. And in this webinar, in this session itself, I'll be explaining some ways how you can go about reaching some venture capitalists. And third, again, this is very popular. I get a lot of questions on LinkedIn and Instagram, people asking, I don't have too much revenue, I don't have too many users, and do you think I can still raise funds? Yes, definitely. A lot of the smaller VCs or early stage VCs invest in startups who just have a vision, right? You don't need to have like millions of dollars of revenue or millions of users on your platform. Just a small proof that the concept works and that you have the ability to actually execute and build, that's enough for multiple VCs to give you a small amount of money. So these are some of the common myths that I just wanted to clear up before moving forward. Just hopefully everyone's on the same page. Now moving on to how to get started. Now let's assume that you have an idea for a startup and that you have already built the MVP, which is the minimum viable product, or the prototype, or the first version of your product. Let's assume that you've already built that. Now, what is the next step, right? How are you going to reach out to VCs? What are you going to do? How are you going to continue to build your startup? So there are two ways. One, either you can use the profits that you are making to continue to run your startup, right? So whatever profit you're making from the startup, you're reinvesting it and again using that money to build your startup. Or you can raise some money from investors to speed up the process. Now I'll give you an example. I'm sure that you guys might have heard of Zerodha, right? Zerodha is one of India's biggest stockbrokers, and they are completely bootstrapped. What does bootstrapped mean? It means that they have never raised money from external sources. They have never raised any money from a VC or anything like that. They have been bootstrapped. So that means they have used their profits to continue to run their startup. But most of you might not know that Zerodha started in 2010. It took them almost 11 years to reach the level that they've reached today. But on the other hand, I'm sure many of you might have heard of Grow, right? Grow is also one of India's largest stockbrokers, mostly for mutual funds and stocks. But Grow is not bootstrap. Grow raised money very, very early on. And they were able to reach almost the same level of popularity as Zerodha in just 5 years. So that is sometimes the difference between raising money and not raising money. You can speed up the process. Now, of course, there's tons of pros and cons in each, and I don't want to get into that today. Some people are completely against raising money. Some people are completely against bootstrapping. It's every person has a different opinion, right? And both opinions are correct. There's no correct answer to this. Just it's important that you guys understand the difference between bootstrapping and raising money. Now I'm going to go through a little journey, a 3-step process of what happens when you want to get in touch with an investor or a VC. Step 1 is reaching out to the VC. So now there are multiple methods. I'm sure you guys might have already heard of a lot of these, starting with cold emailing, cold messaging, getting connected through mutuals, and participating in VC events. So let me just break this down for you. Cold emailing means you somehow get the email address of a particular investor, angel investor, or a VC from their LinkedIn or website or something like that, and you send them a quick email. Number 2 is cold messaging on LinkedIn or Twitter. So remember this, almost every single investor or VC is on LinkedIn, right? That is a separate way. A lot of VCs, they get hundreds of emails every week from multiple startup founders who want to raise, but they don't get that many messages on LinkedIn. So if you write a good, strong, attention-catching message on LinkedIn or Twitter, there's also a good chance that the VC might actually reply to you over there, right? Number 3, getting connected through mutuals. Now, this is something that I would recommend. This is probably the fastest and one of the easiest ways to actually reach out to a VC. If you know someone who is connected to a venture capitalist, then they can just make an introduction for you. What this does is this establishes your credibility even before you meet the investor. And the investor is more likely to listen to you and to hear you out, right? So if you do know anyone who knows, reach out to them, try getting some introductions, some connections. This is a really good way. And the last but not least is participating in events. Now, I don't know if you guys might have heard of Titan Capital or 100x VC or a bunch of other startup or VC firms. They all have their own events, such as Chai with Titan or 100x VC Gurukul or Lightspeed Extreme Entrepreneurs. So what they do is they basically have these events where you can go meet them, pitch your idea to them, and if they like it, they move forward, or they help you with mentorship, incubation, connections, things like that. So don't hesitate in participating in such events. It's fine if you get rejected. You probably will hundreds of times over and over again, but do not give up. Keep on reaching out, keep on participating in events, and sooner or later you will be able to talk to one VC and get their feedback. Now, in continuation to step 1, we have also added a couple more points. So now while you're sending an email or message, remember that you have probably 30 seconds to catch the attention of a reader, right? If the first 2 lines of your email or message is not strong, then people will just delete your message or they will just ignore it. They won't look at it, right? So make sure that the first 2 sentences describe your startup and make sure it is attractive and catchy. So if anyone reads your email or message, in 1 second or 2 seconds, they should be like, oh, this is a super cool idea. I want to see more. I want to hear more. I want to meet the guys who are building this, right? That should be the main objective of sending an email or a message to any VC. Also, third point, if you have an email pitch deck, then attach that to the email or the message or some other material like the link to your website or app. I get hundreds of messages on LinkedIn and Instagram of people just saying hi, or hi, can you help me? Or hello, how are you doing? Now I can't reply to those because what will I do saying hi? If someone asks me for help, what help do you guys want? You need to be very specific in your email. Tell them, hey, this is my startup. This is the problem I'm trying to solve. This is my profile. Let me know if you're interested. It should be that easy, right? So don't say things like, hi, hello, how was your day? No one is interested in reading all of those things. So keep that in mind. Now, step 2 is your first meeting with the actual VC. So let's assume that your email worked, your message on LinkedIn, Twitter worked, and the venture capitalist or investor is interested in you and invites you to an actual meeting. Again, first and foremost, remember that people have small attention spans. They do not want to listen for 2 hours about your product. They want to listen in the first 5 minutes. They want to hear the important parts, right? So try to get them interested in your product as quickly as possible. So what is the best part? What is the most unique part about your startup or your idea? Make sure you display that first. Make sure you present that or pitch that first. Number 2, during the meeting with the VC, they will ask you for your intro and then your pitch deck, which you will have to present. Make sure you keep it very concise and simple. And also remember to answer all questions to the point. Don't beat around the bush. Don't try to answer a different question. If they ask you a question, straightforward answer, and that's the best way to go. Now, your step 3 is your second/third meeting with the VC. Now, if you have reached this stage and you're having second follow-up meetings with a VC or an investor, that means that they're interested in you guys. So this is your shot to impress them even more. And this time the meeting will probably be with someone very senior at the firm, maybe a partner at the firm or a principal at the firm, right? So the level of questions that you will be asked will also become harder and more in depth. So the best way to prepare for this is to know your industry and your competitors very, 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 very well. I cannot stress on this enough, because if you can't answer questions like who are your competitors or how do you plan to beat your competitors, how are you different from them, if you can't answer such questions, then the investors or VCs won't even think about you again, right? You need to come off that, you need to show that you know the industry and your competitors very well. I would suggest make an Excel sheet with your industry and your competitors within that industry. Make an Excel sheet with the name, the funding amount, and some other details. How are you different from them? How are you better than them? Right? So that if any VC asks, you can just send them that Excel sheet for their benefit. Okay, so now let's have some questions before we go on to the next part of the session, which will be how to build an effective pitch deck. So if any of you guys have any questions, please ask that. I'll be looking at my chat box, which is on this side. I see quite a few messages. Okay, someone's asking, what is a pitch deck? Okay, good question. I'll get into that after this Q&A. How much equity share to VCs? Good question. Okay, someone please show step 2 again. Okay. This is step 2. Minhaj asked step 2. This is just your very first meeting with your VC. Okay, some people are asking how to find incubators. It's not too hard. Just Google list of incubators in India, list of micro VCs in India, and you will get a list. Do research about each of those and then send them messages, send them emails, reach out to them somehow. Okay, so a lot of people are asking, okay, someone asked, is there an age limit? Absolutely not. There is never any age limit to entrepreneurship. You can have a startup at 13 years old. You can have a startup at 100 years old. There is absolutely no age limit when it comes to building something and solving problems. Okay, so a lot of people asking how much equity do okay, there's 73 new messages. So okay, okay, you guys do have a lot of questions. Okay, so let's go over one question. How much equity to give? Now this is a very tricky question because there is no right answer. You can give as little as 5%, or you can give as much as 25-30%, right? So it depends on a lot of factors. Now these factors are, is this your first time building a startup? Are you a first time founder, or do you have prior experience? By prior experience, I mean, have you built another startup before, right? For example, Kunal Shah was the founder of FreeCharge. He built that from 0 to 1. He raised millions of dollars and he sold it for hundreds of millions of dollars, right? So when he started his next startup, which was Cred, he was not a first time founder anymore. He already had the experience. That is very important. Another thing is that, are you still a student? If you are still a student, then sometimes VCs get a little bit nervous because you might have college, your parents might tell you to sit for placements. A lot of different things are there. So I would suggest that if you're a first time founder and you are raising your first round of funding to build your product, anywhere between 10 to 20% of equity giving out is normal, right? Anything more than 20-25% becomes too high, and anything less than 10%, that's good for you, obviously, but that's also very rare. So 10 to 20% is what I would suggest as normal for your first round, either a pre-seed or a seed round. Okay, so a lot of you guys are asking how to be better than your competitors, right? Now that's not something that I can sort of explain. That's a very tricky question. You need to find a unfair advantage. You have to find something that gives you an edge over your competitors in your field. It could be finance, fintech, education, AI, ML. It depends on what industry you guys are. Okay, so now what we'll do is we will move on. A lot of people are still asking, you know, what is a pitch deck and how to do that. So let's move on to how to build an effective pitch deck. And for this, I will actually share my screen. Okay. I hope this is visible. Just let me know if this is visible or not.
Yeah, it is.
Okay, great. So now I'll show you guys how to build a pitch deck. What is a pitch deck? A pitch deck is a PPT or a slideshow that describes all the aspects of your startup: future plans, financial calculations, your product, your solution, of the problem that you're trying to solve, everything, right? So now I'll show you guys how to build an effective pitch deck. So the first slide of the pitch deck should be your name of the startup, the name of the startup. The next slide should be the purpose of the company. So in 1 or max 2 sentences, you need to define your startup. What do you do? What is the problem that you're solving in 1 or 2 sentences at max? Then in the next slide, the third slide, you describe the problem. What is the problem you are trying to solve? How big is this problem? Does this problem affect millions of people? Does it affect billions of people? Or does it only affect 10 people, right? What is the pain of the customer? Or, address their issue, talk about the problem. Now, the fourth slide is going to be talking about your solution. You've described your company, you've described the problem. Now describe how are you going to solve the problem, right? Over here, you need to demonstrate your company's value proposition to make the customer's life better and to solve the problem. So this is where you show your product. What is it that you have built and what is it that people will pay you money for, right? Super important. You can make 2 slides for this also if required. Now, the next slide is the why now slide. Now, this is optional. I would say this is optional. You don't have to have it, but it is good to have a why now slide. Why is now the best time to build your product? And I'll give you an example. When Steve Jobs and Apple were launching the very first computer, why was that the best time to build their own computer? Because the internet was just getting started, right? So obviously computers were the next logical advancement in technology, right? How do you access the internet? Through a computer. But if Steve Jobs had launched the computer 10 years before the internet, that wouldn't make sense at all, right? Because what's the point of the computer then if you can't, the internet has not even been discovered. So it's very important to understand why is now the best time for your startup and for the product that you're trying to build. Define some recent trends that make your solution possible. Now, coming on to the next slide is the market size. This is also an important slide. How big is the market? How many people are there who are facing the problem that you are solving? And out of them, how many are willing to actually pay for your solution, right? So in this slide, you need to identify the customer that you're catering to. If your target audience are students from college, then that is your market size, college students in India or college students across the world. That is your market size. So how big is that market? Now coming to the next slide, competition. This is again one of the top 3 most important. List your competitors and how are you better than them. So this is a very big talking point with VCs or investors. Every VC or investor wants to know how are you better than your competitors and who are your competitors, right? So it's how are you better than them is a very subjective question, right? It depends from startup to startup. For example, let's look at Byju's. Byju's caters, what is their market? Who is their customer that they cater to? They cater to the school children. Anywhere between kindergarten to 12th grade or 12th standard are Byju's customers. How are they better than their competitors? Because one, their entire platform is so unique, right? They have partnerships with Disney and they have added cartoons and animations to make learning better. So that is their competitive advantage. Now you need to find out what is your competitive advantage. Now coming to the product. So this is also important. And this will show the most important part of this slide will be the future roadmap of the product, right? Where will your product go in the next 2 months, next 1 month, next 6 months, next 2 years, right? What is your vision? What is your end goal for the product that you are trying to build? Now, the last 3 points are the business model, the team, and the financials. Now, the business model, you need to talk about how are you going to earn money? Because at the end of the day, if you are building a startup, if you are starting a startup, you're doing it to make money, right? Otherwise, you can become a charity or otherwise you can become an NGO. But investors will only invest in you if they think that they will be able to earn a lot of money by owning a small piece of your startup. And that will only happen if you become a valuable startup, if you become a profitable startup, right? So talk about your revenue model. How will you make money? Pricing. What is the price of your product? What is the price of your competitor's product? Is it more affordable? Is it less affordable? Talk about different things like sales and distribution and your customers. How are you going to reach out to your customers, right? How are you going to advertise to them? How are you going to sell your product to them? All of these things. Now, coming to the team point. Now, this is something that a lot of people miss, but it is equally as important as everything else. A good investor will focus a lot on your team. Why is your team the best team to build this startup, right? Do you have prior experience? Do you have good tech coders or programmers in your startup who can build out your tech platform if your startup is related technology, right? Do you have some special insights or connections? Why are you the best people to run this startup? Very important, but a lot of people miss this. So make sure you do not miss this. And finally, last but not least is the financials. Now, if you are in a very early stage startup, you have just thought of an idea, you've built your prototype or your first version of the product, it's fine if you show them that you don't have any revenue. But if you do have revenue, then you can probably show it in this slide. And of course, how will you make more money in the future? So these 10 things are what is required to build an effective pitch deck. Now, if you have more than 10 to 12, at max 13 slides, then it's becoming too long. Investors do not want to sit for 2 hours or 1 hour listening to you pitch. It needs to be short, clear, crisp, right? They should be able to understand in 1 second. What is the problem? Oh, okay, got it. What is the solution? Oh, wow, good solution, right? All of these things should be super clear like that. So keep this in mind. Don't worry, we will be sharing all this with you, all of that. So don't worry if you're not able to understand in the first shot. Now, I'm sure a lot of you guys know AIRBN, right? AIRBN is a huge multi-billion-dollar startup that was started in about 2008, 2007-ish, around that time. So I have some snippets from their pitch deck, and I've added them over here. So this is all AIRBN's case. So in AIRBN's case, they talked about 3 problems that people were facing. One was the price. When you're trying to book a hotel, it becomes very expensive sometimes. Number 2, hotels. When you want to stay in a hotel, you sometimes stay far away from the city or in some other places, and you get disconnected from its culture. And the third problem was that no easy way exists to book a home with a local or become a host, right? So these were some of the problems that AIRBN were trying to solve. So what was their solution? Look at how simple and easy they've made it. One line where they've said a web platform where users can rent out their house or space to host travelers, to save money when traveling, to make money when hosting, and to share the culture of the city. Super easy, right? 3 things, 3 problems, 3 solutions, and 1 platform to solve it all. Now, there's a bunch of other things. There's market validation, market size, product. I'm not going to go over this. It's already been 35 minutes. But if you just check it out, look at the product. They have taken actual screenshots of their website and sent it to them. And they've made it so easy. Search by the city, review the listings, choose which one you like, and book it. 3 steps, and you can book your own AIRBN in a foreign city or a foreign country or a foreign state, right? So I hope you guys are trying to understand how simple and easy to understand your pitch deck needs to be. And as you can see, AIRBN also did a sort of a competitor list, right? They had bedandbreakfast.com, which was a competitor, hotels.com, hostels.com, Air, Bed and Breakfast. All of these are competitors. So they made a competitor chart. And some of the competitive advantages that AIRBN had was it was first to the market. It has a lot of incentives for its hosts. You only have to list it once, and a couple of others as well. So this is basically how you can build your very own pitch deck. Now, let me just go back and see if you guys have any questions. So feel free to ask questions now. We'll be having a Q&A session. So ask questions if you guys want. I'm getting your questions over here on my chat over here. Okay. Okay, a lot of you guys are asking for a BlueLearn pitch deck. I'll show it to you guys, but not now, maybe at a later time. We've already sort of been 35 minutes in. I don't want to take up too much of your time. We'll show it. It's not an issue. We'll show it, but maybe at a later time. So don't worry about that. And Okay, someone asked who gives money to VCs and how do they return it? So money is given to VCs by huge organizations, right? Or very rich people. They give money to VCs to handle. So if I'm a VC, I will go to very, very rich people or bigger firms and tell them that, hey, if you guys give me 10, 100, $200 million, I will manage this amount and I will invest in startups. Now, let's say someone, a rich person gives $10 million. He said, I'm giving you $10 million. You invest in startups on my behalf. And 10 years later, I want to see some good returns. So the VC will take this $10 million and he will invest in, let's say, 5 or 6 different startups. And out of these 5 or 6 startups, 2 startups become very successful. And because of those 2 startups, that 10 million becomes $30 million, right? So 10 years later, the VC will go back to the person and says, here is your $30 million. And these are your returns. So I've given you a very rough example, but this is something similar to what happens. The time duration sometimes becomes less, 2 years, 1 year, 3 years, something like that. But that is basically how it works. Okay, so a lot of people are asking, can you send us that list of points for the pitch deck? Yes, don't worry, we'll send it to everyone. Don't worry about that at all. Oh, okay. So now follow-up question, what do VCs get in return? VCs take a cut of the profit that they make. So if you invest, let's say $1 million into a startup, and that startup becomes very, very good, and that $1 million is worth $10 million now. So the VC will take a small cut out of the total profit and give the rest of the profit to whoever he took the money from. That's how VCs make money. They take a cut out of the profits. Okay. Someone asked a good question. Ayush, good question. He asked, can we mention the funding that we are expecting in the pitch deck itself? If yes, shall we keep the bar? So I would say no, do not mention how much you want to raise in the pitch deck itself. But when VCs ask, you need to keep the number ready in your mind. And more than the number, you have to keep the justification also ready in your mind. Let's say if VCs ask, how much do you want to raise? And you say, I want to raise 1 crore. They will ask you, what will you use 1 crore for? What is the reason? You can say stuff like building a team, building our technology platform, renting an office space. All of these things are acceptable answers. But I would say don't write it down in the pitch deck, because if you're pitching to another VC, you might want to pitch a different number, right? So if you're pitching to a larger VC, you can try to ask for a little bit more money. If you're pitching to a smaller VC, you can try to ask for a little bit less money. So do research before the investor, before you actually pitch to them. Okay, someone asked, Ananya, good question. She asked, why do angel investors choose to become angel investors over VCs? It's because angel investors are people who are passionate about startups and they want to help other startups grow, right? They don't want to, if you are a VC, then that becomes your full-time job. You become the money manager of a large amount of money, and it is a lot of stress, a lot of tension, right? It's high stress job where you have so much money and you need to make sure that you make the right investments into the right startups so that later on it gives you good returns. Now, if you don't want that much stress of playing with someone else's money, you can use your own money, but smaller check sizes. So a small angel check could be anywhere from 1 lakh to 10 lakh rupees, right? So it doesn't have to be large. Angel investors usually invest very small amounts of money. Okay, I'm getting a lot of questions. I'm getting 30, 40 questions. I will not be able to answer all of them. I'm really sorry.
Shreyans, you can take one last question
Yeah,
and then we
I'll
can
take,
wrap it up.
makes sense.
Also, guys, this was meant for the pitching competition that we'll be having. So if you guys don't know what the pitching competition is, you'll be asked to make a pitch deck based off whatever idea you have for a startup. And we'll be putting out the Google form on the community. So if you aren't part of our Discord or WhatsApp, then do join and go to the website and join the community. On the Google form, you'll have to upload the pitch deck that you have made for your idea. And if we think that the pitch is good enough, then we might, you'll qualify for the finals where real VCs would come and you can directly pitch to them. And maybe if it's good enough, even get funded for it. So that's the entire pitching competition. The guidelines for making the pitch deck can be found on the Google form, which will be shared on WhatsApp and Discord both. So make sure to join the community, and also tell your friends about it. If folks are interested in startups, and do let them know about the competition. And it's all totally for free, so it's good for you guys.
Yeah. Yeah, guys, I hope my screen is still visible. I want you guys to, after the session, come on to BlueLearn's website and you can apply for the Entrepreneurship Club for free. And we will be having a pitching competition on 21st, right? And we have collaborated with actual VCs, Lightspeed, Chirate, 2AM Ventures, InfoEdge, First Check, and 100x VC. And they are ready to provide mentorship and to listen to your pitches. And in fact, Chirate Ventures is ready to even fund a startup up to $500,000 if they like it, of course, not just any random startup, right? If you pitch to them and they really like your idea, they really like your product, then they are also willing to include you into their new program, which they've launched. So if you guys want a chance to meet actual investors, pitch to them, get mentorship from them, do sign up over here, submit your pitch deck like what Harish said, and we will be reviewing them. The best ones will move forward and we'll get a chance to talk to people like this. And just to show you how how significant this is, Lightspeed has invested in companies like Snapchat, Oyo, Byju's, and so many more. Right? So this is like, it's not a small thing anymore, right? These are big people. And if you want that opportunities, do apply, right? That's it for this class. Let me just stop sharing my screen. Thank you so much for attending. I'm still getting a lot of questions. So sorry if I'm not able to answer them. But this entrepreneurship club is something that will happen every week, every weekend, and we'll be having different competitions like a pitching competition, brainstorming sessions, etc. And guys, asking your same question multiple times is not going to help me answer anymore, right? If you spam it, that's just, I'm just going to ignore that. Okay, so someone asked a good question. Do we need to tell the VCs all the details of the money and where the money has been used? Yes, it is good practice to keep your investors updated with how much money you have spent, how much money you're going to spend, where you have spent it, why you have spent it. So it is usually a good practice.
Shreyans, a couple of questions have come in about the pitching competition.
Okay.
The first one is, should we have a prototype?
Should you have a prototype? It's not necessary. It's not necessary at all. But if you do, then that's just better. It gives you a better edge, right? If you already have a website or an app or a prototype of something that you can show, that will give you a unfair advantage over others. If you don't have anything to show, then you might not be able to get the chance to meet these actual VCs, because we have to show them some good quality startups, right? Not just some idea that you had. This has to be people who are very serious. Okay, so a couple of people are asking, can we do the pitching competition just for fun? Yes, definitely, 100%. We will be reviewing all the pitch decks that come to us, and we will try to give feedback on them as well, right? So where you think you can make it better, how you can make your pitch deck better, how you can make your product better. And the ones that we really, really like and think have potential, we will be moving them forward to the next round. Some people are asking, how do I get the WhatsApp group link? If you register, you will see the link. So don't worry over there. Yeah, it's in the chat box. Just do check it out.
Let's wrap it up, Shreyans.
Sure. I'm still getting a lot of
guys, the
messages.
Entrepreneurship Club will be happening every weekend, so don't exhaust all your questions now. We'll keep it for later as well.
Yeah, guys, I think I've got like 300, 400 questions. I'm super happy, excited to see that so many people are excited about this. But it's great. The Indian ecosystem, startup ecosystem, is definitely becoming bigger, and it's people like you who will take it to the next level. And for all of those who are skeptical about pitching, if their product is not ready or if their MVP is not ready, they just have an idea, don't worry, just go for it and pitch, right? There's no harm. It's for free, right? So definitely just go for it. And thank you so much for staying till the end. Sorry I couldn't take all of your questions, but like Hari said, this will be happening every week, every weekend. So definitely we will continue answering such questions. Yeah, maybe Harish or Viraj, you want to put the link one more time?
Cool, guys. See you in the pitch deck competition then. The community link is in the chat section, and you can join the community. We'll be making the announcement soon.